Welcome back. You're tuned in to Editors Roundtable. Well, we've been making this point that domestic money has been flowing in, and you have, and you will make the difference as well, going by the kind of inflows we're seeing. And the reason I say it is in the last few years, well, you've seen various hurdles for the Indian stock market, whether it was demonetization, implementation of GST. There were a couple of global wars or conflicts as well that did take place. And the Fed, as well as other central bankers, they've been tightening the screws. Amid all of this, you have the FI flows as well that have been fairly volatile. They have been putting in some money, they've been pulling out as well. And even this year, particularly in the last month or so, and in October, we have seen some bit of pull-off from the FI. So their flows have been fairly volatile. Then who's made the difference? Well, you have made the difference. Because the way the flows have been coming in, it's been very, very heartening. And to run you through a couple of numbers then, the SIP flows for the month of September, it's closer to around $2 billion. Massive increase is what we have seen. And if you pull up a chart for the last few years, on a monthly basis, if you look at the SIP number, during demonetization, it was a fourth of what it was. During COVID, it was half of what we have delivered in September. And as of September, it's nearly around 16,000 crore rupees. So you need to keep those SIPs going. And I'm sure if you have it sip by sip, this Indian stock market party will be rather good for you. So you've made the difference, and you will continue to make the difference, is what we think so. Well, Ajay, let's get your view on this. We need to caution our viewers about valuations as well. But I think these flows that are coming in there via the SIP route, it's encouraging. This equity cult here in India is getting developed. What do you have to say about it? And also, if there are any stocks you'd like to play it by, because the AMCs, this week, they were outperformers. Your take?
I think it's a great thing for investors and for the people, because also minimizes the risk they take in the market instead of direct investing, which is very, very sensible thing at this point of time. So I think it's an absolute great thing. The only thing that is very important is to understand that are you making a return which is superior to your debt return? Because if you look at the equity markets over the last 10 years or 15 years, there have been large periods in which the returns have been significantly below the debt returns. So yes, it is very nice to put the money in, but the discipline has to be to keep evaluating, are you making the right return? Are you choosing the right funds? Are you choosing to exit at some point of time? There's not going to be a street which is going to give you money in all sectors every time. That's one. Number two, yes, today there's a great amount of security. That if you look at the capital goods theme, it's a great security. If you look at the defense theme, wonderful. Consumer stocks can go up and down, remain safe. So if you are focused around these sectors in your economy, I think you are just fine at this point of time, which is the MNC consumer companies. We're talking about the defense funds. In fact, a lot of sectoral funds are from defense. You're okay. You can also be okay when you're building it into NASDAQ. And you saw what happened. Yeah. You bought into NASDAQ, it crashed for 40%, it's gone back 30%. And so, so you don't want to get caught on the wrong side of the market, yeah. SIP notwithstanding. But I think they're great options, great thing for people building up net worth. But as I said, discipline is not putting in. Discipline is to pull the money out when you need to and book your profits.
All right, Ajay, clearly you're sounding a little bit cautious about the equity markets, and we are actually alerting our viewers about valuations, about historical trends as well. But you tell us, fresh money that's being deployed. You have spoken in the past about these bonds, about gold, about real estate, as well as equity. What should the allocation be?
See, very clearly, I think if you ask me today, our allocation towards the gilt is going up, and we have just moved it from 5 to 10%. And I think in the matter of, by the time the next policy, if the increase comes, we should take it to 20-25% of our portfolio. So gilts is definitely part of the thing. We're going to write the capital gain theme on the gilt side. The other part of the company is the new age companies. I think they are now coming into their own, and some of them are giving very good returns to the investors and got phenomenal business prospects. So I think you need to put some money on the new age company. Defense, I think, will plumber along. And I think next big is the capital goods. And let's not forget, where the rich of India spend the money, you got to put your money, which is the five-star hotels, the hotel companies, the airline companies. Unfortunately, you can't have too many luxury companies don't exist in India, but you got to follow every single theme where the rich of India invest. And at this point of time, and the two ones we can see very clearly is hotels, resorts, airlines. I think these are places to be. You can't get anything in November, December. So might as well encash it if you have to pay for those kind of fares.
Yeah, but if you had bought hotel stocks, a year ago, then you would be able to buy a hotel room anywhere, right? Even this weekend. I mean, Nigel, what are the rates this weekend in Ahmedabad?
To go to Ahmedabad, it's 23,000 rupees.
One way,
tomorrow morning.
Wow.
I was thinking about it actually, during Bazaar today, I saw 2,300 first. I was thinking, but then I checked it again. It was
But who's the smartest of the lot?
Nimesh.
I heard you're taking the Vande Bharat.
Yes, I'm taking the Vande Bharat, not only going, but even coming. So I'll take off on Monday, meet some companies as well, but I'll take a easy way out of, traveling by train and coming back by train.
So
And of
before
course, watching
booking the cricket match tickets, you booked your train.
I booked the train ticket so that at least I'm sure that I can travel easily.
Correct.
Because I knew that the match tickets will be available only towards the end or at the very fag end. So I just booked that. I mean, worst case, what would have been? If I don't travel, my train ticket gets cancelled.
So we are all going to live vicariously through you this weekend. And,
Chak de India.
And we're all going to be sitting in front of our TV screens and watching the match. But to all you viewers and Ajay as well, thank you so much for joining us. It's a very electric weekend lined up with India-Pakistan. So come on, India. We're cheering for you, rooting for you. And we're going to see all of you bright and early on Monday morning. Thanks for watching.